court orders Kraken to submit user details to the IRS. The court ordered Kraken to turn over personal information of certain users to the Internet or Internal Revenue Services or Service, IRS for short. According to the court order, Kraken must submit details of clients whose annual traded value surpassed $20,000 between 2016 and 2020. The personal details requested by the IRS include usernames, addresses, birth dates, and taxpayer identification numbers, among other documents. Moreover, Kraken must disclose blockchain addresses, transaction hashes, and raw blockchain data to the agency. The court document revealed that the IRS sought Kraken's user records since March of 2021, when the exchange issued an administrative summons to the exchange. The IRS alleged that Kraken failed to comply with the court summons. The filing added, quote, despite discussions between parties, however, Kraken refused to comply with the summons and has not produced the books, records, papers, and other data demanded in the summons. Consequently, the officials filed the current case against Kraken in February of 2023 to enforce the demands of the 2021 court summons. Now, this is part of the difficulty when, following Watch Your Guru and some of those crypto Twitter deals is they do, kind of release this news a little late. We had talked about this, I believe, back in February of 2023, but this is par for the course, as to be expected, of course. I think with cryptocurrency in general, as far as regulation is concerned, it's going to start with tax, basically tax revenue, because you can't be skipping out on your taxes as far as that's concerned. If you filed, individually and were tracking with something like bitcoin.tax or something along those lines and then submitting, I think everything will be just perfectly fine. Obviously, what they're doing is trying to get some of these bigger accounts that surpassed $20,000 between 2016 and 2020. This does bring up, of course, the question of, fundamentally, is this okay in cryptocurrency and blah, blah, blah. I think, like I've talked about before, the on-ramps and off-ramps being centralized exchanges is what you do to participate within the old system of fiat, right? And if you're going to do that, then you pay the fiat fees. We'll quote Jesus, right? Give unto Caesar what is Caesar's, that type of thinking. But if we were going to talk about, what this is going to, why this is going, or how this is going to impact, I think, crypto regulation in the future, or crypto access to the general public in the future, I think that it does spell out some tricky situations, seeing that it's going to be a lot more difficult for people to participate within cryptocurrency within the United States. I think for the most part, what you're going to see is a lot more stringent rules set by cryptocurrency exchanges. I think this is why we saw a 52-page end user license agreement from crypto.com come out not too long ago. And these requirements are getting just crazier and crazier. I think, well, the last I saw, crypto.com 2 was also sending out, requests that you reset up, your direct deposits, if you even have any of those anymore. I mean, for the most part in the US, direct deposit to a cryptocurrency exchange, period, the banks have blocked pretty much across the board, as well as the federal credit unions. So your inlets and outlets are getting skinnier and skinnier and monitored more heavily and more heavily. Of course, this is the reason why people talk about virgin Bitcoin. This is the reason why mining is important and will be extremely relevant, especially within, I think, the United States, because this will be an easy inlet, right? If you're utilizing hardware to generate that, not only do you have a paper trail that proves that you aren't doing anything suspicious, but you also have that inlet into cryptocurrency that is outside of the banking industry and that sort of thing. So, I think that becomes extremely relevant, especially if you're trying to get in a hefty amount of investment within Bitcoin or within cryptocurrency itself, because your ability to get your savings or anything like that into something like Bitcoin through traditional finance is going to become more and more difficult, and it'll get obviously taxed to hell. The hard part, of course, with mining from the tax perspective, though, that we have to, talk about is you get taxed not only on the electricity that you're running, but you get taxed, the income when you mine it. And then you also get taxed on the capital gains if you held it. And that can be extremely difficult to manage as a miner, and keeping track of that, and making sure that you can actually even make a living off of mining can be extremely difficult, especially when you have things proposed like the 30% tax on crypto mining from the Biden administration. Boo-hoo. Hopefully we'll see that get shut down. I presume it will. Let me know what you guys think in the comment section. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.